So, first of all, the headline number, literally the headline of our story, is the fact that Senator Perdue made close to 2,600 trades, 2,600 trades during his first term in the Senate of 6 years. We really have data for about 5.5 years or so because he sold off a lot of his stocks in April, if not most of them. But at the same time, this is a record by Senate standards for that term. The next 5 senators who did the most trading activity combined are roughly equal to what Senator Perdue did during that time frame. Now, it's important to state that this is lawful, as far as we know. It's legal for members of Congress to trade stocks, including stocks that may rise or fall depending on what happens with the government work those members of Congress and the Senate are doing. This is a privilege enjoyed only by Congress and a few others in government, including the vice president and the president. It's verboten in other areas of government. But at the same time, it does raise many questions about, number one, the sheer level of activity, number two, some of the cross currents between his committee work and the relevant companies that he may have been buying or selling while he was on those committees and subcommittees.
You mentioned, the law and that it is legal for members of Congress to trade stocks. Some of Senator Perdue's trades, though, as you point out in the story, have been looked at by investigators in the past, including in a company called Cardlytics.
That's right, Scott. So Cardlytics is a card data analysis firm in Atlanta. Senator Perdue was on its board before he joined government. And when he joined government, he had options that vested. And they also did him a favor of sort of extending the period of time in which he could own those options, theoretically, so he could take advantage of it as a public stock when it went public, which it did in 2018. So long story short, he has continued to hold Cardlytics stock in recent years. And there was a point in January where he directed his broker at Goldman Sachs to make a Cardlytics sale 2 days after receiving an email from the CEO of Cardlytics that alluded vaguely to upcoming changes. Now, that email ended up being a misfire. The CEO told Senator Perdue it was a misfire. And as it turned out, that CEO was making plans at the time to step down and did so, I think, about 6 weeks later, which that, as well as some information about missing future sales targets, caused a drop in the stock. So arguably, Senator Perdue averted some losses there. But the Justice Department looked into that, Scott. This is a story we broke at the New York Times. They ultimately did not bring any charges. They ultimately found that there was just not enough compelling evidence of any sort of insider trading here. So they dropped it.